Hello and welcome to Simple Chart Analysis. Let's continue our daily blueprint for intraday traders. So let's go to 1 hour. This is the Nifty, and the drawings that you're seeing here is what we drawn yesterday. And we decided that this was the level that's going to be crucial. If it breaks this, then we have targeted this area here. And because I said that there has been some bearishness in the market, but however, just to trap some of the bulls here, I think the market just went up, and it wasn't so sure of going up because it stayed just around these levels whole day, and just by the end, in the last 30 minutes or so, we saw this big trending bar. However, if you look at GIF Nifty futures, it's showing like it's gapped down today around 0.8%. So the market here has kind of uh, gapping down, and clearly you can see by this that the bulls have been trapped here. Okay, so especially in the last few minutes who have bought, um, you know uh, no matter what the reason was, whether it was a form of fear of missing out or something, there was a sudden rush here and people have bought. So just imagine what would have happened, what would happen to them if it gaps down and opens somewhere here. So there would be a huge loss. So don't expect immediate recovery if there is a gap down, because these guys are going to close their positions and then it can go down a bit. So if you haven't taken any position, because I'm hoping you are all intraday traders and you haven't taken any carry forward positions here. So if it gaps down, expecting it to be around 0.8%. So let's assume it gaps down by 0.5, 0.6% or something like this in this area. Then we have to wait for a few minutes and then see how the market reacts. And as I said, those who have bought here, they would be in a panic and they'll be closing the positions. So there could be some sell-off here in the first 15 minutes or so. So you wait patiently, and again we are going to do our analysis as to how we should proceed with this. Okay, let me clear all these drawings, and let me go to daily. And remember, I draw this one here, the trend line, if you have seen my first video. uh, so this is where it is finding the resistance now. It just went up like there and then expecting a gap down. So it doesn't mean that it has to come down drastically like this. If the market is strong and the momentum is there, then it can just come down and then break this trend line, which is a good sign actually if that happens. Because instead of breaking this barrier in a one single shot like this, which can be unsustainable, instead, if it comes down a bit, consolidates a bit, and then breaks, then it will have more strength and confidence as well in the market. So that is what I'm expecting. So this trend line still holds good, at least for today. And if you go to mark some support levels here, I would say we can find some support in this area. So let me go to 1 hour and show you more clearly. So as we are expecting the market to open around this area, so it's a support area actually. So all you have to do is, I'll mark two areas for you in case if it becomes a trending day. Let's see whether it's going to be a trending day or a normal day. Okay. So let me go to daily. See, because of this gap down, if that happens around 0.5, 0.6%, so there is a chance that it can stay there for a while, and it might not breach the today's high so easily. So let's go to 1 hour and see. There is a possibility that there could be. I mean, if it breaches this level, only if it breaches this level here, then we can see a trending day. So as the market is expected to open around this area itself, so you wait for some price action. If you see some buying, because you have to understand that this is still in a bullish trend, making higher highs and higher lows. You shouldn't ignore that fact. Even though we have some negative bias in this market, this for the intraday, the overall structure is still going up. Let me tell you what I mean by that. You see here, from this point onwards, it has been going up. Okay, so this is just the whole area is just a consolidation here, and then it has broken out of that. So you have to assume that there is bullish momentum in this, and there are some reasons as well why it has to be bullish as well, because of the Iran war conclusion, and then oil price dropping quite steeply. If you just check oil price, you see it has come down to around 75 $76 a barrel, and that's the reason. So, and if you look at 1 hour as well, it is just making higher highs and higher lows. You shouldn't ignore that fact. Okay, so it is gone up, and it's probably a pullback. So pullback shouldn't be considered as a what do you say, downtrend. Okay, it's just a pullback. That's how you have to see it, and the pullback is coming in the form of a gap down. You see what I mean? The pullback is coming in the form of back down. So as a gap down, and then if you just wait here and see how the price reacts, and if you see some sort of consolidation here and then makes a move to the upside, then you can go and buy for intraday. In case if it breaks this, then you can sell as well and target this area here, which could turn into a trending day. Okay, so you can expect a trending bar only in this condition. Okay, it caps down, and then it couldn't sustain, there is a still weakness, and then breaks this, and then cannot go up, and that is when you're going to sell this and targeting this area with a minimum of 1:2 risk to reward ratio. That is for Nifty. Let's check for Bank Nifty, and this is our yesterday's drawing. So here also you can see very clearly that the market is making higher highs and higher lows. Okay, so it's probably a pullback again here. You have to see it as a pullback until that pattern has changed. When will that pattern change? If it breaks this level here, only then you can say, okay, the uptrend has ended. Until then, you still have to consider that it is an uptrend and you're expecting a pullback. That's all. And as I said, the pullback is coming in the form of a gap down. So if you just clear all these drawings, and yeah, by the way, let me just quickly see. See, this was our analysis yesterday, and it opened somewhere here. Okay, and if you go to lower time frames to see whether you could have had any trades as such, so I opened here, and then as I said, if you are a price action trader, obviously you could have found some reason, logical reason to back your buying opportunity here. It came down very quickly, and then there was a sudden green bar which was pretty much equivalent to this bear bar. Okay, but that is not where you take the trade actually, because it's just the bears are still strong but the bulls are coming back in the market. And then when this bar happened, obviously you would be thinking, okay, the bears will have an upper hand if it goes down. Okay, but in fact that didn't happen, and there was some consolidation again. So that's kind of initial uh, signal for you, that's saying that the bears have exhausted their momentum. And also you have to combine that with the overall structure. As I say, it was higher high, higher low, higher high, higher low. Even in this lower time frame as well, this 15 minutes, it was making higher high, higher lows. It was a pullback. So you have to consider that while assessing using price action. And then you can even drop to 5 minutes after that assessment, and you can, as I said, the very simplest way is drawing the trend line and taking the trade, and you got a good trade here. So this is how you trade actually using price action. As I said, you can watch my other videos on price action, which will help you read the charts better using that method. Otherwise, as I said, very simple ones are, you know where the zones are, you know what's happening, and then you draw the trend line and then go with the market rather than against the market. So in this situation, it was going making higher highs and higher lows, so you will be looking for buying opportunities, and you saw a good area there and then you buy it. If you don't get it straight away, and you might get it wrong several times, that's okay, but you just practice with very small lots, and then you can increase the lots, scale up later on. Okay, let me clear all these drawings and go to Bank Nifty 1 day time frame. As you can see here, our resistance levels that we have been drawing for quite for 2 3 days now, which is this area here. So it seems like it has popped up. See, this is what happens, it has popped up. So if it sustains, then it's good, it's going to go higher. You have to understand one more thing, because the journey has started from this point onwards. So if it goes up like this, in case even for whatever the reason today, if the market Bank Nifty goes up like this, it becomes highly difficult to sustain these kind of things, because it started its journey from here without proper breaks. without proper breaks, in the sense if it had gone up like this and then there was some consolidation and then moved up and then consolidation and then moved up, that would have been good. But that is not the case here. It has just moved in one single shot, and that's why it can become unsustainable at times. So those are not so reliable. So let's go to 1 hour time frame. And as I said, in here you can mark this as a good support level. So if you go to 1 hour, you can see much better here. And this structure here is where, so if you expect this to gap down somewhere in this zone here, and you see your target should be around, I mean, you can now condense it. Actually, you don't have to take the whole stuff there. You can put it something like this so that you get a clear area where you can take the trade. So if it opens here, and then same with the Nifty. You use the same analogy. You observe both the charts so that you get an idea. Sometimes you get a better trading opportunity in Nifty and sometimes in Bank Nifty. For example, yesterday you would have got a better trading opportunity in Bank Nifty rather than Nifty. So you have to see both the charts and then analyze them and then see which one works better. Okay. Sometimes both of them give good opportunities, sometimes one of them, and sometimes none of them, obviously. So let's say if it opens here, sorry, so if it opens here, and then the same with the Nifty, if it consolidates and then, if it's showing bullish strength, like I said on 15 minutes price action yesterday, so if you see that's happening, then you can go and buy. Okay. Else, if it, and as you know, the falling is always be quick. If it is not quick, then there is a possibility that bulls can come into the market. So if that happens, then you can target this area with 1:2 risk to reward ratio. The zones and structure are pretty much similar, but you just have to see which index gives you better trading opportunity, because you should be ready for both, in my opinion. And I mean, you can change the quantity according to your risk, but you should see both, because most of the times one of them gives a good trading opportunity than the other. So this is the analysis for Nifty and Bank Nifty. I hope you're enjoying these videos, guys. Let me know in the comment section if you want to know anything more or any other specific topic. I will include in the list. Thank you, guys. See you tomorrow.